Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the April 16th, the thirsty Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's have an extraordinary one. And the easiest way to have an extraordinary day, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question and in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now we got a mixed market out here, mixed bag. Let's take a look at it. We've got the Dow trading down 175 points, about 0.75% to the downside, and the NASDAQ up 82 points, 1% to the upside. The S&P basically flat off 4 points. Russell 2000 is not flat, down over 2%, down 24 bucks. Semis are up 22. So we've got a mixed bag out here. Spot volatility index trading out at 41.92. I believe that's still below its 50-day exponential moving average out there. Gold's off $8. Silver's up 8 pennies. Light sweet crude is back a quarter. Natural gas is up a bit, and Treasury's up almost 1 full point, 29.30 seconds, trading out at 181.15. Dollar-wise, the upside, Amazon, the amazing one, is leading the charge, up $87, still off of its highs though. AutoZone is up 48, a nice move there. Regenerate Pharmaceuticals up 4%, 22 bucks. To the downside, Booking Holdings 26, Transdigm off 16, Sherwin-Williams down 13, MasterCard off 11. So plenty to look at. Of course, I want to look at what you want to look at. The only request so far comes from Michael P. Michael is asking the question about the NASDAQ or NASDAQ futures, and the question is, how high can they go? So let's go take a look at this for Michael. Michael, let's open up the NQ daily chart here. Give me one moment to pull that over. Where did I put that? Here we go. And what we're going to be looking at is, well, it's current patterns, Michael. First, today, what the NQ has done is it's tagged its 1-to-1 A to B equals CD area. And that price projection was 87.42. It's gotten over that. Today is going to be bar number 8 of a TD setup 9 count. And so you've got two patterns that are out here. The TD setup 9 count would require either bar 8, well, that could be today, bar 9 or the bar following 9. So that's today, tomorrow, Friday, or Monday for that pattern to complete out here. I don't know where the NQ is going to end up the day's action. If we've got a green-bodied candle out here, well, then it'd be very easy for tomorrow for there to be a bearish reversal candle. And if we do get that, really what you're looking for, Michael, your question is how high can it go? And I never know the answer to that. I can give you price projections. The next price projection, as an example, would be 91.13. That's on the A to B equals CD format out here. However, we have to realize that at any point in time now that it's completed the 1-to-1 level out here, if there's a bearish reversal candle that forms, you're going to get your Gartley sell pattern inside the NQ. So you're asking how high can it go because you're short the Russell 2000. You're absolutely short the right indice. Why is he short the right indice out here? Not just because it's trading down by 25 points, but because of the following. You see, what the Russell 2000 did was what it created was what? A Gartley sell pattern. It completed a perfect 1-to-1 A to B equals CD. We get the dark cloud cover candle. This is back on Monday. You have an inside bar on Tuesday. Yesterday actually qualifies as a bearish engulfing candle. So as you take a look at this chart, everybody out there, come on, everybody out there, I want you to do the same thing. We're holding class. This is a TFNN school out here. You tell me tell Michael, where's the Russell 2000 on his daily chart? Where is price headed to? That way you know that I'm not pulling anything out of my arse. This is just simply very objective. It helps us understand. Where is support? Really? Right? Isn't that the question? And it's at 1,100. Exactly, Jay. 1,100 buckaroonies. And Stevie's red line is just below that. So that is where the Russell 2000 is headed to. We can see it's a bearish. Now you're going to say, Steve-O, okay, I get you on the pattern, the Gartley sell pattern. All right, I buy into that. And you got price trade at 1155. How can you be so convinced that price is going to head down to 1100? Well, the way that we come up with that is you can take a look at the current profile, and it is bearish in structure. The center line at 1194, closer to the top in price at 1265 versus the bottom out here. My experience is once we start to see price close below the center of a bearish structured profile, sellers should have the power to push price back to support. Now, if we see it close below 1100, the Russell 2000 will be the first indice to tell you we're going back to the lows, and it's also going to tell you much, much more than that. We go beyond the lows, and that's the Russell 2000. So this pattern here that Michael is trading, the Gartley sell, is the exact same pattern, Michael, that you're looking for to occur inside the NASDAQ, because you're right that the Russell's moving nicely to the downside, but it won't get rocking and rolling until the NQ, the NASDAQ 100, decides that it's done and it's ready to roll out here. Now, if we take a look at we've got one Gartley sell pattern. No, we've got more. The other one that is actually formed out here is inside the ES Mini. And that formed yesterday. You're seeing a little bit of follow through today. I say a little bit out here. But now, and this has completed the Gartley sell. So you've got the Russell 2000 and you've got the S&P 500 with the Gartley sell pattern. We don't have that inside of the Dow. So the Dow is kind of the, I say it's kind of the fly in the financial ointment here with regard to patterns. But in essence, it's really not. How can you say that, Steve-O? Well, if you go back and you take a look at other counter trend rallies, remember, all that we are in is a counter trend rally. And other Dow rallies have stopped at the 50% retracement area. Granted, I don't use it, but I had to go back and take a look and say, in my head, I've got to say, why isn't the Dow going to complete a Gartley sell pattern out there? And it just simply may not. So we get back from this break, we're going to go out to Martinez, California. We're going to speak with Brent. Of course, I'd love to hear from you as well. You can reach out to us by phone at 877-927-6640. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside our Tiger's Den, well, any ping will do. We'll be right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tigers Den. For a limited time, you can get a 30-day free trial to the Tigers Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tigers Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tigers Den. The Tigers Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tigers Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tigers Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 183, S&P's off 5. Let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
Oh, I'm doing this great, Steve. I appreciate you taking the call. It's great to talk with you again.
Sure, my pleasure. And folks, we're going to take a look at ticker symbol BG, which is it Bunge or Bungie Limited? Do you know?
It's actually it's a BGS. S is in Sam at the end, Steve.
Got it. Okay. Well, if you wanted to take a look at BG, we could, but we'll go ahead and take a look at what you want to look at, which is BGS. Okay. So that's BGS, B&G Foods, Inc. And I remember when you called on this and you got in quite a while back. Are you still in the position?
I am. Yeah. My question was in regards to, it looks like we may have taken out that swing point with some volume. Going back to, it looked like it was around the end of March, potentially. Like, I think it was maybe March 31st, around 18. And so that was my question, and I just wanted to see if you concur with that, or just your thoughts in general on it.
So the swing point that Brent is referring to, or what you'll see now on my screen is the B point of the A to B equals CD, is from the date of March 23rd. And the high out there was 1860, and the volume on that trading day was 1.9 million shares. I'm rounding up. Folks, it's only 1:19 in the afternoon, and the B&G Foods has crossed that level with 2.3 million shares. So we call that a confirmed A to B equals CD to the upside. Now, the important thing here, Brent, that I'll point out to you is that the retracement, the B to C retracement here, was actually less than a 0.382 retracement, which is a very shallow retracement. And so, folks, what I want you to think about when it comes to retracements is we all can do this. You can either do this visually in your mind, or you can actually do it by pulling out a rubber band. And this is really how these retracements help us to understand the C to D leg, typically, of the A to B equals CD pattern. Take that rubber band and wrap it around your finger, your index finger, as hard as you can so that it cuts off the blood, and then back it off like about 38%. Let the rubber band go, and that's going to tell you about energy. Then do that exact same thing and back it off 62% or 61.8%. Which of those two has the most energy? Well, clearly, when you do it visually like that, it's really the same thing just here visually on the chart. It's the 0.382 retracement. Well, this is even less than a 0.382 retracement. It's a 36% retracement. And what that tells us is that the C to D leg should be, doesn't have to be, but should be stronger than the A to B leg. And so, Brent, this would be signaling to you and I that this should do more than a one-to-one move to the upside. Now, there's a time element involved here. And if it just starts moving sideways versus continuing its nice advance higher, well, that moving sideways will take away from the powerful retracement. Does that make any sense?
It does, yes.
Yeah, so you've got 2386 as the one-to-one, but I would say at this stage here, at least as of April 16th, more likely this is going to do one of the expansions, which would be 1.272 is 26, 1.6 is about 29 out there. So now let's go over and take a look at the weekly and the monthly charts and say, okay, well, where's resistance here? Is there any resistance? Because you're above the top of the daily profile, you're above the top of the weekly profile, and the monthly profile is going to be your next resistance point. So regardless of the A to B equals CD pattern, you're still trying to understand where sellers are at. And on the monthly time frame, this tells us sellers are at 2136. We don't know whether price is going to be able to storm right through them, but we do know where the sellers are sitting when we take a look at its monthly time frame chart. Now, I'll pull over my other tools just to take a look, see if there's any other important information out here. And the next important piece of information is that price hit a resistance level today, 1964. That was created by a TD setup breakdown level. But price has been able to surpass two prior breakdown levels out here. So at this stage here, I don't think that 1964 is going to be the end of the move out here. Just simply, it helps you to understand why price perhaps backed off a bit. And then on the daily time frame chart, that its next resistance level is up at 23 bucks even Steven. On my weekly time frame chart out here, I don't have resistance until 23 even Steven again. So that seems like a pretty logical price projection for you, at least understanding where resistance is at. And then on the monthly time frame, if this thing can really get up and go, and on the monthly time frame, it formed wave number 7, so that was letter G, so that's nice. Looks like an A to B equals CD to the downside. That also was confirmed. And this would be suggesting longer term that its resistance level where price broke down was 33 bucks. Now, what have I left off that you need?
I can't imagine anything at that point, Steve. You covered it all, and put it all in a little nutshell for me. I appreciate it.
Yeah, so you've got a nice confirmed A to B equals CD. You know where there's some resistance levels, so you'll watch what happens there. But this looks really well. And congrats on the trade. Also.
Got the helicopter flying overhead, so hopefully that's not too distracting for you. But
hey, is it dropping money?
I hope so.
Okay,
I've got my hands out, ready to receive it. Hopefully it's coming soon.
All right. Well, wave to Ben for us, helicopter Ben.
Yeah, I've been dropping money all over the place. My son actually got his check, that stimulus check yesterday, I think.
Oh, cool.
I guess. I have mixed feelings about that whole thing, giving away a bunch of free money, but whatever. It's done. What's done is done.
Yes, that's right. Yep, what's done is done. Hey, Brent, always good to hear from you. Thanks so much for calling, and have a terrific Thursday.
All right. Thank you so much, Steve. You take care and have a great weekend.
You bet. Thanks for calling.
All right.
Let me see here. Ken in Kansas wants me to take a look at ticker symbol RTX. So let's go do that. What did I do with the charts? Oh, it's probably behind. It's probably hidden back here. So give me a second. We'll go see what Ken is looking at. I believe that's Raytheon. Let's pull this up on our screen here. That is RTX out here and see what it is doing. And Ken's question is, so what's your outlook for Raytheon? So let's go take a look at it and do the same thing that Brent and I really just did here. I know it probably gets boring for you, but this is what we have to do to understand. Look, we're always looking at our chart and take a look at what patterns are being produced, if any pattern. And more importantly, or just as important, is Where's support and resistance out here? And that's the beauty of the TAS market profile. So here on the daily time frame chart, that's the very left-hand panel, you can see the prices above the daily profile. In fact, a new profile formed a few days ago, Ken, April the 14th, and we can see that prices above that. And that's bullish. So when a new profile forms and prices above that level, it's actually a bullish message. Now, there is some resistance, and the resistance was tagged and rejected last week on its weekly time frame. That's 67.08. So we know that there's sellers out there at the 67.08. At 66.99, similar to that 67.08 level, the 66.99 area is the bottom of its monthly profile. So we've got convoluted messages out here. You definitely have resistance, 67.08, and if price can get above that, well, that will be quite a positive. So let's go take a look at my other time frame chart, see if we can figure anything else out here. Well, somebody wrote in the den, looks like a Gartley sell. So let's go ahead and put in the A to B equals CD pattern here for Duffy. The A point down here on March 18th, the B point out here on March 26th, and the C point out here on April 3rd. And the one-to-one price projection would have been 60 or is 69.27. The question is, Duff, do you see a bearish reversal candle? Hint, hint. Yesterday. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were taking a look at Raytheon Technology Corp out here. Let me expand is really what I should say, the daily time frame chart out here. So you're going to see the A to B equals CD pattern. And this price projection was 69.27. The actual high last week was 68.10. 68.10 versus 69.27. Remember, we use these A to B price projections as guidelines. And price along that C to D level, as long as it gets pretty close to the 1-to-1 area, for me, it's going to qualify as an A to B equals CD pattern. Of course, the whole idea is you're looking to see the message, the market is responsible. Buyers and sellers are responsible for generating signals to you and I. Those are the Japanese bullish and bearish reversal candles out there. And you really want to learn those. Now, to just know the candles and not know patterns, such as an A to B equals CD or a Gartley pattern out there, isn't worth your time and effort. Don't do it. Because you really can't trade off of just candles. They're helpful. They help us understand where the war is going on. But where they really have their meaning is when the pattern is completing, such as in the case of Raytheon. So what Raytheon has done, similar to what we looked at inside the Russell 2000, inside the ES Mini, it has generated a confirmed Gartley sell pattern. Did that yesterday with the bear sash candle out here. Now, all Gartley patterns have 5 potential outcomes. The first outcome is the 0.382 retracement. So, so let's go take a look at that. Let's add that. I'm going to go ahead and get rid of the A to B equals CD pattern out here, just to avoid some of the lines that show up on my screen. And here we're just simply going to go from the A point to the D point to identify where the first retracement level is. So the first retracement level is down at 57.64. And I would say good chances, odds favor, that Raytheon is headed there. That's still above the top of its daily profile that formed out here. So we'd say that Raytheon is headed back to test a support area between 56.07 and then 57.64, which is not really a support area, it's just a 0.382 retracement. If price were to close below 56.07, because it's a bearish structured box, well, 54.06 would be next up. But I would say more likely than not, just getting back inside that box out there would signal to you that you'd head back to about the 50.05 level. That's about the 0.618 retracement. Or number 2, the second outcome of a Gartley pattern, a Gartley sell pattern in this case. Outcomes number 3 and 4 are the 0.786 or the 100% move of a move, which all that means is getting back to where you started from your retracement level out here. And outcome number 5 is that this whole thing creates an A to B equals CD to the downside. So no reason for us to go there just yet. But Raytheon looks like it wants to pull back, and I'd be watching at 56.07 level on the retracement for a decent feel as to where things are headed to. So I hope that helps you out. We had a request inside the Tiger's Den to look at UNG. We can do that, but I really think what you're asking me is to look at natural gas out here. But if I take a look at UNG on the daily time frame, you're going to see that what price did was it moved all the way back into a bullish structured profile out here. 1181 is the bottom of that box. The low so far has been 1177, and prices bounced off of that. Now let's go take a look at the actual contract itself. And here on the daily time frame, what we're going to also see is that we have a bullish structured profile, and price pulled back and tested that, $1.56. Now, the question is that like a buyable bottom? Is that a major bottom? And I don't know the answer to that. We can see that it's a little bit of a higher low, so I can say, okay, it can make sense out of the trade. I can't make sense out of the trade from a pattern standpoint. What do you mean, Steve-O? I don't have any kind of a pattern as price pulled back. I've got the 3 drive to a bottom pattern that led to a move up to, I believe, the bottom of the weekly TAS market profile out here. Now prices pulled back. So it's almost if there's more of a sideways consolidation that's going on. Do I recommend you jump in on the long side of UNG right now with price below Stevie's red line in the actual contract? The answer is no. I would say you would be better off to wait for a close above 163 and then recognize that you may have to jettison your trade between $1.75 and $1.83 out there, and that is its bearish structured profile. Inside the UNG, and it's going to be the natural gas contract that's going to control when and where and deals with resistance out here. If I go back over and I take a look at the UNG ETF, it's the 1321-ish area, but really who asked me gold 25 or something like that inside the Tiger's Den. If you're trading UNG, you've got to be paying attention to what's going on inside the underlying instrument, and that is the natural gas contract out there. So I hope that helps you out. I believe we've got some questions that have come in by email. So let me see if I can get to one of these or two of these out here. Here we go. One coming in from Eddie. Can we take a look at Amazon? It gave up most of its gains today, and now is trying to rebound. So yeah, actually, Eddie, thanks for asking the question. What we're actually going to do is we're going to go take a look at it. Well, here, let me put Amazon up here. That's what you asked for, right? AMZN. And so here, wide-ranging bar weak. I mean, major wide-ranging bar. A to B equals CD-wise to the upside. It's at the 1 to 2 level out there. Tom likes those 1 to 2 A to B equals CD. His belief is that once you get to that 1 to 2 A to B equals CD, the market is going to do something else out there. So, whoops, take that for what it might mean out there. And now, what Stevie would say is, hey, wait for the market to prove itself to you, which means you need to see some type of bearish reversal candle in this A to B equals CD pattern out here. That's the daily time frame. But price here is above all profile levels, daily, weekly, monthly out here. So what I want to do is let me switch over to my other chart, my other daily time frame chart. In a moment. And the reason why I want to do that is because Amazon is one of the top 6 that make up more than 50% of the NDX 100. So we really need to kind of understand, hey, what is Amazon doing? So take the 1 to 2 A to B equals CD. And those of you that own The Art of Timing the Trade, you can probably find the page that Tom mentions that. I know he's got to mention it. He certainly did in the first book out there. I've got to believe he's got it in the second version as well. If we take a look at Amazon, well, remember we looked at the NQ, and the NQ is showing a similar TD9 count pattern. Today's going to be bar number 8. So what do we know about the TD9 count pattern? Well, first, with regard to Amazon, the last time it made any significant eye out here was on bar number 9 of the TD9 count out here back in February. Hey, can it possibly be the patterns will repeat? Remember, the high out here, Eddie, on a TD9 count is going to happen on bars 8, 9, or 10. Is this a hanging man? No, this is not a hanging man. Maybe I don't think that's what you were looking at inside Amazon, but on a daily time frame, no. And by the way, hanging man, there's a lot of folks out there that like to hang on to a hanging man being a really bearish candle out there. And granted, you look in Japanese nomenclature with regard to its candlestick, it'll tell you it's a bearish reversal candle. It's the weakest of the bearish reversal candles that are out there. And I don't necessarily recommend that you get too caught up into a hanging man candle. Hanging man candle looks like a hammer, only in an uptrend out there. Statistically speaking, is what I just gave you. Don't hang your hat on a hanging man. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is off 134, S&P flat, NASDAQ 100 up 95 points. And so back on Amazon out there, look, with the top 6 holdings with inside the NDX 100, that's Microsoft, Apple, Amazon, Google, Facebook, and Intel. 4 of them are in bar number 8 of a TD Set 9 count. Microsoft, Apple, and this today would be bar number 8, Amazon, and Google out there. And so there's potential of a top. Today could be that top, tomorrow or Monday, based upon that TD9 count out there. Hey, let's go to Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you doing today?
Fantastic, Steve. I really enjoy your show. Your expertise as a technician is I learn something almost every day when I listen to your show. So I really appreciate.
Well, that's great. I'm glad to hear that. Thanks for listening. We appreciate that.
I've been watching platinum for a long time. I wish I had continued with a little investment program I had with physical gold. I went to 50-50 when I was purchasing gold coins and platinum, figuring that at some point in time the spread would have reversed, and it did not. But I look at a long-term chart of platinum. We seem to dip back to 800 back when the Great Recession 12 years ago. We broke 800. Now we've gone back to 800. So that old support has now become resistance. So I'm curious, and I'm looking to buy some more physical platinum here. So I'm wondering. It's hard to look. I'm looking at the chart here. It seemed like everybody was looking, perhaps that physical is undervalued. So we had that big jump, almost $120 over that, from 720 to 850. Now we've backed off to we're right in this 800 range again. And you can't buy platinum basically under. You're talking $900 an ounce for a coin. If you can find a 1 ounce platinum coin.
Right. Platinum always has a high premium.
Right.
For coins, especially for platinum eagles.
And if you can find one. if you can find one. No one seems to. Occasionally, you can find a quarter ounce. The U.S. Mint, they're talking $950.
Right.
The proof coins are like $1,150, $1,200 if you can find one. So it's hard to find out what the true market value is, but they don't exist out in the real world. So I'm just looking at the physicals. Now we're holding 800, 780 to 800 on this. So I'm just, how do you analyze platinum right here?
Well, because you're throwing out a bunch of. So first, we're in the July contract. Let me do this here. Yeah, I'm going to put the continuous up on my screen in just a moment, just to make sure. First, I'm going to take a look at the daily time frame chart for you, and then I'll change the symbol. So at this stage here, when I take a look at platinum, it made an A to B equals CD to the downside pattern, and it confirmed that when it generated this little bullish candle out here on March the 20th. And what it really has going on right now is an A to B equals CD to the upside potentially on a daily time frame chart. And I'll draw that pattern, and I can't draw it on this chart here, but I want to give you the first level to look at on a daily time frame where resistance is at. And this is where price had broken down previously, and that's at $919. So, I was trying to listen to your question carefully. Are you long platinum, or is this more about buying coins or the futures contract?
Well, both. I was lucky to purchase the contract at 630, and when we got towards 700, I sold my futures contracts. But I did buy some physical platinum at 850, some coins, and I'm looking to buy some more if I can find them. And I just don't know if we're going to be topped out here at 800 or 820, or do we still have more upside?
Well, I believe there's more upside.
I'm holding off buying more platinum coins.
Yeah. So, well, the reason why we would say there may be more upside here. Well, this is a tough one now for me to do the A to B equals. It's a strange one. It's not the normal way that I would do an A to B equals CD pattern out here, but it's what I've got to do here. So I'm going to give you one price projection out here, and remember, I gave you a daily area where there was going to be resistance. I think it was 9 something, but you've got an A to B equals CD pattern to the upside that should get you up to 871. The reason, and even though it's pulled back the last couple of days out here, they're just really inside bars. They're somewhat meaningless, so to speak, out there. It's not any type of topping signal is really what I should get at. And if at tomorrow's close, there is a close above 791. That would be closing above. I'm going to open this up here. That would be closing above its bearish structured weekly profile. And it's bearish in structure because the center line, I'm just going to have to turn price off here so that you and everybody else can actually see that. And I just want you to be able to see the profile levels because that's what is speaking to you and I. But now we can see how the center, which was at 744, is much closer to the top at 791 versus the bottom at 650. So this is bearish in structure, and what this is really telling you is on an intermediate term time frame, price should stop at 791. So if at tomorrow's close, price closes below 791, then you know where the snipers are at. And that would say, okay, you know what? Price is going to go ahead and push lower. On the other hand, closing above, there's nothing more bullish than a failed bearish pattern. And not so much that this is a pattern, but the pattern of, hey, if this is a game of war, the bulls versus the bears, the buyers versus the sellers. So in this case here, buyers will have overrun sellers that were hanging out at 791, and that just then opens up the level that I gave you on the daily time frame, either an A to B equals CD pattern or 919, which is where price had previously broken down. So so that's what I see when I take a look at the platinum futures contract. It's a July contract that's being traded, folks. And even on the pullback here on the daily, on a 4-hour time frame, what we like, Jim, is price pulled back to what looks like a support level, which is the top of the 4-hour time frame profile, which was at 780.80. And I would say you could use that as a gauge if you were to see price close below that, and it's well above that right now at 801. But if price were to close below that, that would be a signal to you that it's also headed lower. But at this stage, it looks like what Platinum wants to do is today's retracement looks to be normal, pulling back to a support level, and it looks like it wants to continue to move higher. Does that help you out?
Yes, it does. What's amazing to me is on a futures contract, which there are very few contracts traded. I'm looking here at volume around 9,600 contracts. The bid and ask is really tight, which is amazing to me. I mean, you're only talking most of the time less than $1 on a bid ask. So that's telling me that it's tradable. It's not like it's a $5 spread or anything like that.
Right.
Which is interesting. Just an interesting observation to me. And I never saw it trade down to that 779.9 today on the daily because it snapped right back $20 real quick.
Yeah, it did. This was a profile that had formed below price, and those are bullish in nature, and that's the way that price really reacted. Hey, we're about to go to a hard break.
Okay.
So,
well, thank you so much for your insight.
You bet. And thanks so much for listening to the show. Steve Rhodes with TFNN.
I know.
We'll be right back, folks.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're going to take a look at the NVIDIA for one of our listeners out here, Hector, and the fuel injectors. And Hector is absolutely right that what NVIDIA has done today is it's cleared a level of resistance, the level of resistance being the top of that daily profile. Now, that is a equally distributed profile. The center is pretty much smack dab in the center. And ordinarily, Hector, we would say, hey, that's a bullish outcome here. The problem, and something that you've got to keep an eye on, is what NVIDIA is also doing. It's testing a prior swing point high. In fact, it's all-time high. Is that true? Or was it a higher high way back when? I think it's its all-time swing point high out here. And either way, it doesn't really matter. It's a swing point from February 20th, which had 20.25 million. Now, it's nearly 2 o'clock. We've been trading for 4.5 hours. There's 13 million shares. If we divide 13 million by 4.5, and we multiply that times 6.5, we're going to be, at least in my mind, we're going to be below the 20 million mark. Not by a ton, maybe a million shares or so. But watch the volume characteristic. Ideally, and I know you're long, you'd really like to see price close above 296.35, volume or not. I don't have a completed pattern or anything, but you're testing an important swing point to say, you know what, maybe it just doesn't have the energy to move to the upside out here. And then if we take a look at the daily time frame chart right now, and we were looking at a daily, but my populated daily time frame chart out here, today's going to be bar number 8 of a TD9 count. And we know that highs can take place on bar number 8, 9, or the bar following 9. So just be careful. I would just use a stop. That's what I would do, and I would watch today's close for an additional clue, and a possible pullback or retracement to about the 268 level. So Hector and the fuel injectors, I hope that helps you out. Thanks so much for writing in. Thanks for the calls today. Thanks for the emails, folks. Stay tuned. We've got 2 more hours of great programming up next. You got your favorite polar bear. He's my favorite polar bear. That's David White. And my favorite Obi-Wan Kenobi, the only Obi-Wan Kenobi on the planet, Tom O'Brien. He'll be with us from 3 to 4. Have a terrific Thursday, folks. We'll see you on Fantastic Friday. Take care.